Welcome to my weekly look at the WTI crude oil prices. Now they've been continuing their march northward, which is great for the oil companies and oil industry, but not great for the consumer and the economy, especially with inflation doing what it's doing. So will something give to that bullishness, or will it keep on going? Well, in today's report I'm going to dig into the technical analysis, a bit of fundamentals, a bit of sentiment to find out. Some sentiment first then, and we have seasonality down at the bottom there, that grey shaded area. Still got some upside to go before it starts getting flat into February. And COT, commitment of traders data, the red line being large commercials, black line large speculators, has now moved in line. It had diverged last week, but now back in line with that bullish run as expected. So all bullish there on the sentiment. So the Baker Hughes rig count numbers still growing, which is a good sign for the industry as a whole. And I look at the US line, mostly plus 13 change from prior count and up 228 from this time last year. For those who like to focus on the inventories, then last week was better than expected numbers, minus 4.553 million barrels, the actual number. Waiting for the forecast to come in, so watch this space for that, and again look for any large outlying anomalies. So diving into the pure price technical analysis, we got a weekly line chart, and I've left last week's variables on there, the yellow box and the pink trend line there supporting that price action. No real big changes other than the price is heading on upwards into the $90 area at the moment. It's got a bit of a reasonable pullback. If it does snap back down to that pink sort of line around $64-65 and into that yellow zone between $75 and $63, but at the moment looking very strong. So for you oil bears out there, we have the 4-line break chart looking for those reversals back against the trend, and on the left we have the daily 4-line break chart with two interesting numbers at $82.50 and $79.50 if you've been a bit more conservative to the downside. And then on the right hand side we have a 4-hour 4-line break chart to give you entries a bit quicker than the slower daily setup. $84.25 and $83 are your numbers to look out for there. So the daily high can actually straight into the indicators at the bottom, both bullish. Volatility actually has come down quite heavily in the last week, from its average of about 33% per year down to 17%. Volume trading just under its longer term moving average. So heading on to the price direct, I left on the purple triangle from last week to see where that price headed, and it broke out as anticipated and is in between now that two pink line box breakout system, right in the mean of the 2 standard deviation regression as well. And we can see on there the green arrows and green support line where the price really didn't want to go below, and has built from there in its current short-term uptrend. Other than that, it's all looking reasonably bullish at the moment. So it's a similar story on the Renko chart. Views 50 cents block size. All the signals below are bullish, and we head on to the price. Then it's been in an uptrend. It's trading above its moving average. It's again broken out above the 2 pink line box breakout system. And in terms of targets, well, we're looking at probably $87 next, and then up into the mid 90s. Downwise, look for a pull back to that 61.8% line at about $72-73, and below that down to that 38.2% line at just above $67. So based purely off the technicals, then it's a bullish overall outlook, seasonality, commitment of traders both improving, rig count holding strong, and in the top right there, line break chart giving you a bearish reversal against the trade. And if you go back to that full line break chart, you'll pick off the numbers for possible entries. Heikin Ashi, the weaker of the two compared to the Renko, weak bullish overall, and Renko, in the shorter term more bullish. And into the targets, the move upwards has lessened the risk reward to both the up and the downsides, and we got 1.2 and 4 to 1 to the bull side if you're being a bit more aggressive, and 2.1 and 3.33 to 1 to the downside. So at the moment it's a bullish outlook for oil on the technicals. So if you take the technical picture by itself, then everything looks rather bullish and rosy to the upside, but I wonder how long this will be allowed to continue, by the powers that be, especially when we're fighting inflation, interest rates and other economic issues. So really, you've got to factor in the fundamentals as well to your price analysis, because they can shift this market very quickly in either direction. Fundamentally, really, we shouldn't be at these sort of price levels, but it's a funny old world. Speculation, all that sort of stuff can drive the price higher. So be very careful, use the technicals as a guide, but like I say, factor in those fundamentals as well. And let me know in the comments below where you think WTI crude oil may be heading next. Now, if you liked today's video, please give us a thumbs up. Don't forget to hit the subscribe and bell buttons. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.